G'day folks, Jim here from FX Charts, 29th of January. Thanks for tuning in. It's been a pretty uninspiring session really. The dollar's pretty much unchanged. The yen and the Swiss franc, they gave up a little bit of their ground following their recent gains on safe haven status. But the dollar's not done an awful lot. The data out of the States was a bit mixed. The consumer confidence was better than expected, but at the same time the durable goods missed pretty badly. So the dollar wasn't quite sure what to do with it. And ahead of the Fed decision later on today, I don't think we should really expect too much from the market. So we'll go and have a look at the charts. And the euro really is pretty much unchanged from yesterday. Let's just get a euro chart. It's just chopping around. Did come a little bit lower in early Europe, got down to 136, just 136.30. But it's struggled back since then, and it's unchanged on the day. The hourly charts are flat, and direction from here depends on exactly what the Fed come up with in the decision press conference. Now, an extra $10 billion is expected in tapering, as it is possibly for every month throughout the year, and then the stimulus program will cease to exist towards the end of the year. That's the expectation. But until then, the euro today is just chopping around this 38.2% FIBO support of the run higher to 138.90. Now the 4-hour charts are moving. They're suggesting we could drift off a little bit, but nothing spectacular. And the dailies are flat. So I think what's going to happen is we're going to see absolutely nothing for the next sort of 24 hours or so. And then when the Fed decision does come through, it's going to be pretty choppy, but probably not all that. Probably not with all that much direction. We've got the 100-day moving average. If we do head lower down here, it's a 130, just under 136, and then we've got good uptrend support is around 135.5. On the top side, 137.40 has been the recent high, and above there we've got the 138.90 high. So I kind of think we should expect some more choppy trade. Keep an eye on the stock market. So they're the ones that are going to drive all this, I think, later in the day. The market, I think, is expecting the S&P to head lower, but quite honestly, I'm not sure that we should expect too much below 1765 on the S&P at the moment, and it could be that we're in for some choppy 1760 to 1800 range trading. As far as the yen goes, well, that's, as I say, it's given up a little bit of ground. It did get up to 103.25 in early European trade. That's on the back of a hedge fund buy order, but it stopped here at the 100-hour moving average, just below the 50% pivot of the move down. Now, I'm not sure we're going to go too much higher in the short term. I don't really expect to see an awful lot at all. The 4-hourly charts are suggesting that we could see another test of that 103 to 103.25 level. I'd be surprised if we had much above there. But really, it all depends on the Fed. The hourly, the daily charts are actually showing that we could see another test of the downside. And if we did see a break of the 101.75 area that we saw early in the week, then we could go back down. This is 101 at the 100-day moving average, and 100 down here at the 200-day. Don't think we're going that low, but and in the longer term, I suspect that dips are probably buying opportunities for another rally up towards 105. But I think it's too early to preempt that at the moment. Cable, well, the market obviously got itself a little bit long ahead of the fourth quarter GDP. Now that came out as expected. It wasn't a bad number really. It was at what was it, 0.7% quarter on quarter for the fourth quarter. Now cable got up to a high of 166.25. On the release of the numbers, it fell right back down to 165.30. So the market was obviously called a bit long. It's since got back to 166 and just chopped around in that sort of area. And I think that's going to be the sum of it, really. I don't think we're going to go too far, and it wouldn't surprise me really to just see us chop around this FIBO area here where we are at the moment, 165.85. On the daily charts, the uptrend does remain intact. If we can take out this high here, which was back at 166.67, then we need to go way back here to the weekly resistance, which is about 167.45. I think that was here, 167.45. Now, the weekly performance actually doesn't look that bad, and it looks as though we could just sort of head on here towards this level, but it's going to be choppy. And the dailies, the dailies, as I say, they are showing some bearish divergence. So while as long as we stay above this 164 area here, then the uptrend remains intact. Below there, we'd see a deeper sell-off and head perhaps back towards the 162.5. That remains to be seen, and it'll be up to the Fed to decide that in the short term. Swissy, well, the Swiss franc's given up a little bit of its safe haven status today. It's ground back. It got up to 90.10. It's a little bit below that at the moment. I don't think we should expect too much today. The dailies are actually showing that the dollar could have another test to the downside, but it's not really significant. And yeah, I think we're probably in for some more choppy trade. I wouldn't be too involved right now. The Aussie, if we look at this is the hourly chart, we got back up and tested the FIBO support at 88.20 that we said that we thought we might happen, but and since then it's come back off. I guess the US consumer confidence data saw a bit of a dollar strength. Aussie yen also helped push the Aussie higher with the yen weakness when dollar yen went back up to 103.25. But now we're just going to be chopping around. We've got the Westpac Leading Index today. I don't expect a great deal, and once again we have to take our view from what the Fed do. Now, if the Fed are hawkish, then the US dollar will pretty quickly regain its ground, and we'll see the Aussie head back down to this sort of 87, sort of 30, 60 area. If it breaks below there, then we're going back down to this low here, about 86.60, 86.55. If we get below there, then 86.30 is a long-term low from back from 2010. So keep an eye on that. On the top side, should the Fed be dovish, given that we're expecting an increase in tapering, I don't think that's going to really happen. But we could see another squeeze back up here towards 89, 89.20. But once again, we have to wait and see what the Fed do. The Kiwis got the added bonus of having the RBNZ rate decision tomorrow. That comes out shortly after the FOMC result. Now, while a rate hike had previously been expected, it's now down to about a 40% expectation. So I just think we're probably likely to chop around here for a while. If the RBNZ delay or say they're going to delay any potential rate hike until later in the year, we are going to see the Kiwi that could drop quite sharply. But we've got the 200-day moving average and the 50% pivot to support it down here. Now, the last two times we've tried that, we've seen a decent bounce. So I expect 81.30.40 to be reasonable support. While on the top side, I don't think we're going much above 83, 83.5. And as I've said before, I think the choppy trade is going to continue. So that's about it for today. It's going to be a pretty uninspiring session, a good day to get the admin out of the way, I think. But around 6 a.m. tomorrow morning Sydney time is when all the action starts. So I think be on your toes till then. I'd be pretty flat going into it, and really it all depends on what the Fed say. Overall, I kind of like the idea that the dollar will eventually make a comeback, the US dollar, but it may be a bit early for that at this point in time. And as I said earlier, just keep an eye out for the equity markets to see what they do. And also the US bond market, of course, always important. So that's about it for today. I don't think we should expect too much. As I said, we've got the Westpac Leading Index. And later in the day in Europe, we've got the German consumer confidence. I think that might provide a bit of a blip. But all the focus will be later in the day on the Fed. So that's about it today. Have a very good one, and we'll talk to you tomorrow. Cheers.